Good evening. Welcome to part 1 of the video titled Commodities Trade Finance Part 1. As we speak, Russia and Ukraine war is going on, and it's around 25th day of the war. The Western world put lot of sanctions on Russia, but Russia is unrelented. And I think Russia has decided they would be taking Ukraine at any cost, even at the cost of the economy, even at the cost of employment, even at the cost of anything I can't mention in the video. You understand? But anyways, we are not here discussing about the war. But this war is sending a negative signal to the financial markets. And specifically speaking, one section of financial market, which by the way is known as commodities. History is witness that commodity market is more profitable than any market of the globe. But having said that, history is also witness that the volatility in the commodities market is beyond expectation than any other market. So let's take a simplistic example, euro. As we speak, euro is 1.10, trying hard for 1.11. So maximum what would happen? Euro is 1.11, it can go down by two big figures, which is 1.09. Maximum. Max to max, three big figures, 1.08. If it appreciates, it can go 1.14. Maximum, I'm saying. But commodities is beyond expectation. One news and gold can swing $50. One news, gold can come down $100. We have seen, just now we have seen that because of Russia-Ukraine war, gold went 2070. Everybody was expecting gold to touch 2200. I have seen thousands of comments on the social media where people started predicting about 3000 at that point of time. And I was like, what the hell they are talking up to? But now, as we speak, gold is near about $160 down. It is 1930. $140 down. Now the commodity players. Now, first of all, we need to understand who are commodity players. Commodity players are those players who take up positions in the commodity markets. Now, when it comes to the commodity markets, we have big funds like Goldman Sachs, JP Morgan Chase, Citi, and all leading banks. They are either acting as a market maker, which means they connect buyer with the seller, or they are taking the proprietary position. Sometimes they act both, which is they act as a market maker as well as they take the proprietary position without quoting any specific name. Now, whether this is an ethical exercise, that is very subjective. But commodity players are divided into two parts when it comes to capital. And that is something is the basic backbone of the commodities trade finance. Guys, if we speak about currency market, if we speak about the other asset classes, including crypto, the kind of capital you need is limited. Of course, capital is endless, I would say. You can invest $1 billion in Bitcoin, or you can handle with $100,000. So capital is endless. You can have as much as capital as you wish. But having said that, all asset classes, including crypto, do not need gas guzzling capital. By gas guzzling capital, I mean enormous capital. But commodity is completely different on the opposite side, because here you need gas guzzling capital. Now, commodity include positions in agriculture products. Position is oil, better to refer as a petroleum products. Positions in metals. Agriculture product, I can say you don't need gas guzzling capital. Whether this is corn, wheat, silver, coffee, simplistically speaking, perishable commodities. But when it comes to oil, and specifically when it comes to metals like nickel, aluminum, oh my goodness, you need hell lot of capital. And capital is constrained because volatility is very high. So let's take an example that when due to short squeeze, we cover short squeeze, nickel went 200,000 at LME, London Metal Exchange. I'm sure many idiots must have taken long positions at that point of time. I'm sure about that. But what had happened? Huge losses. Huge. Because you have taken positions at LME, probably CME, probably any other exchange. And then what? Boom. This ends up or wipe out your whole capital at once. But there is a twist in the story. And bloody hell, it's a big twist in the story. And what is the twist? The twist is the people who take big positions in the commodities, they do not invest their own money. They invest the bank's money. So this time I'm not quoting the name of an American bank, but there is an American bank who funded the Chinese billionaire who created big shorts in nickel. I don't know, Russia-Ukraine war is going on. Who suggested that Chinese billionaire to take a short position in the nickel, and that to a huge quantity anyways? But whatever he took, this money is from an American bank. And now this American bank is in trouble because the war is still going on. Nickel is highly volatile commodity, even without war. And now this is known as commodities trade finance. This topic is endless, but yes, I cannot cover everything in one video. This is known as commodities trade finance. So in short, commodities trade finance is nothing when the big banks fund the players like the hedge funds, the pension funds, probably the commodity trading firms, the middlemen, and sometimes government owned organizations. Remember, government owned organizations to take position in commodities. And these banks who fund, they don't fund from their own pocket. They fund from the money they received from the depositor. So the American bank I'm talking about must have funded from the depositor money, which ends up as ECL, expected credit losses. Now, maximum what happened? Impairment. So, guys, the moral of the story is very, very clear. Do not think that the big commodity players who are taking a big positions, they are always backed up by their own capital. Hardly they are backed up by own capital. So the majority of them are non-proprietary in nature. Non-proprietary in nature. And this is the beginning, I would say, of a concept called commodities trade finance, which, by the way, is a huge concept and I love to explore more. This is Rahul Magan from Treasury Consulting Group. You know my personal number, which is +91 9899 242 978. Alternatively, you can WhatsApp on our back office, which is +91 9818 485 155. Have a great time.